One of the best ways to make consistent money in the stock market is by selling credit spreads. Through this one strategy alone, I've been able to get out of my full-time job and trade the market full-time. Over the last month alone, I made around $25,000, and through all the different years I've been trading for about like 6 to 7 years now, I've had many ups and downs, many failures, but it's through this one strategy that I've been able to find consistency in trading. And so I want to teach you how to properly sell credit spreads. Now, before I go into how to sell credit spreads, what you have to understand is in the options market, you're either a buyer of options or you're a seller of options. And if you're a buyer of options, that means you're buying a call, which means that you believe the stock is going to go up, or you buy a put, which means you think the stock is going to go down. Not only do you need to get the direction of the stock correct, but the timing is very important. If the stock does not go up or down in that certain time period, then your option will ultimately expire worthless. This is why most options that are bought expire worthless. This is why it's best to be a seller of options, because you become the house. You are the one who's selling these different option contracts to other people, and ultimately it just means more consistent wins for you. So let's talk about how to sell credit spreads. All right, so let's talk about how to actually sell credit spreads. So let's say I'm going to trade Tesla. Click Tesla on your broker. I'm using Robinhood. I use Robinhood when I sell credit spreads. And you're gonna go to trade options, and say I'm bullish on Tesla. I'm going to sell a put credit spread because I'm bullish. So I like to go at least 1 or 2 months out. Here I'm going to choose March 28 expiration. That's about 36 days out. And to sell a put credit spread, you're going to hit the sell and you're going to hit the put. So highlight those. And I'm going to sell one a little more out of the money, $345. I'm going to sell that, and then you want to buy the lower strike. So I'm going to buy the $340 put. And so what you're going to see, it's going to say put credit spread, and the total credit is $1.90. So it's $190 per spread that you buy. Max profit, $220. Max loss is $280. And the break-even price is right in between that spread. So as long as Tesla stays above 342 by March 28th, you're going to profit on this trade. And so as you can see here, there's many different options to choose from. How wide the spread is also matters. Say I sell the 345 put, but then I buy the 335 put. That's a $10 spread. So you're gonna see the total credit here. You're gonna potentially make more money, $395 or $423 max profit, but your max loss is going to be bigger, $577. And then the break-even price is $340.77. So as long as it stays above $340.77, you make money. So the more wide the spread, the more expensive and potentially the more money you can make. Okay, so that's how you do a put credit spread. Now say I'm bearish on Tesla, then what you're going to do is sell a call or sell a call credit spread. So how you do that, again, I'm gonna go March 28 expiration. I'm gonna sell a call. So I'm gonna find one that's a little out for the money, so 360. I'm gonna sell that call, and then I'm gonna buy a higher strike, so the 365. And so when you look at the final order, it says call credit spread. The total credit is 1.75 or $175. Max profit is $205. Max loss is $295. And the break-even price, as long as Tesla does not go above $362, you get paid on this play. And same exact thing if you widen the spread. So say I sell the 360 call and I buy the 370 call, you're going to see that your max profit is much more, but the risk is greater. And so again, this is how to sell either a call credit spread when you're bearish or a put credit spread when you're bullish. So one question that you probably have here is, when do you implement this strategy, and do you implement it on ETFs like SPY and QQQ, or do you do it on like individual stocks? And there are many different ways to do it. For me personally, it's very important to understand supply and demand on charts on different stocks that you're watching. I like to only focus on 7 to 10 stocks. I understand the patterns on how they behave, where their support and resistance levels are. And you also can look at options flow to see what big money is buying, whether there's a lot of call flow or put flow in an individual name. But that's all very difficult for you to do. Me and my friend Brian, we have a free Discord where we post all of our trades, where we try to show you step by step how to implement these trades and the reasoning for these trades. And so you can find our Discord at the link in our bio here on this YouTube channel. And so please click on that link. If you have any questions, just let me know, and I hope this was helpful.